guys, today we are going to be discussing some tips for you all that are especially good for first-time home buyers that are looking to get the home buying process started. So if you think this will be valuable for you, then please keep watching. My name is Katarina Harris. I am a local realtor here in Las Vegas with eXp Realty, and I'm joined today by one of my lender partners, Kevin Mackinnon with Movement Mortgage. So let's jump right into it.
Yeah, let's dive in.
Yeah, let's do it. So my first tip that I would give somebody, not necessarily a tip, but just some background info, right? Like the three things that need to be evaluated in order to qualify for a home loan is number one, your income, number two, your debt, and number three, your credit.
Absolutely. That's basically the best way to start. You want to get those things in place, understand where they all stand and where they balance out with each other.
Mm-hmm.
So I would say most important is to figure out your debt to income ratio. So we need to figure out what you have coming in versus what you have going out. So we as the lenders would find that out by pulling your credit. So our credit tells us two things: what your monthly obligations are, and then most importantly, or equally as important, is the credit score itself, because that will dictate a few things, whether you qualify for certain loan products.
Mm-hmm.
And then it plays a big factor in your interest rate. So the higher the interest rate, the higher the credit score, the better access you have to a lower rate.
Very true. And we all know interest rates are topic of every conversation out there right
all
now.
Day, every day right now. Whether you're first time or you're buying your 10th house.
Oh, for sure.
First question I get as a lender: what are the rates today?
For sure. So once you have that established, right, and you've spoken with the lender, I would say that it's very crucial that you get an estimate of what your actual monthly payment is going to be. Because a lot of times you'll get, in some lenders, they may just give you a pre-qual saying, hey, you're qualified for $300,000 or you're qualified for $350,000, but once that payment is broken down, how much are you actually paying per month? So very important.
Yeah, it's an important question to ask the lender when you're looking for the pre-approval amount, because let's say your income and your debt qualifies you for $500,000.
Mm-hmm.
What does that payment look like with what you want to put down and what interest rates are and what your principal, interest plus taxes, HOA, insurance looks like? It could be, let's just make a number, $4,500, but your max budget you can allow for is $3,800. So you just want to be aware of what those numbers look like before you go shopping, before you realize that you're looking at stuff that's technically in your budget for pre-approval, but way outside of your monthly payment plan.
Yeah, for sure. Okay, cool, good stuff. Now, this is something that I get a lot, and I am sure especially with first-time home buyers, you come across this a lot, where people's concern is, when they're shopping to get a home loan, they don't want their credit pulled.
Yep.
Or say it's January now, right? So say they want to purchase a home in April. Well, they want to wait until like the end of March, as close to April as possible before that. First off, my tip was going to be that it's okay to shop around. You don't just have to speak with one lender, right? Like, you want to shop around, you want to get the best rate, you want to obviously be working with someone who you feel comfortable with. But explain that process with how the bureaus, I believe it is, are actually grading your credit when it comes to qualifying for a mortgage.
Yeah, it's definitely one of the things I get the most pushback with is don't pull my credit, don't pull my credit, I'm working on my credit.
Yep.
Even if they're buying, it's January in September, I always urge them to pull credit first, because we don't know anything about your credit history, your scores, until we pull it. And so this has happened with clients of mine, had a derogatory mark that wasn't theirs, and luckily we pulled credit early enough in the process, so we could fix it, we can get it taken off, so that it's not affecting your scores. But from the perspective of the bureaus and the way that they grade a hard pull from a mortgage lender is that it's expected to have you pull at least one or two times, maybe three times, with three different lenders.
Yeah.
And so they don't ding it in terms of lowering the score the way you would think if you go and buy a used car, which is like 15 credit pulls and all of a sudden your score drops 50 points. Like, they expect it to be a service you shop for, because we're talking big time bucks here.
Sure.
And so they will, what I've seen at the hind is an adjustment of like 5 to 7 points after getting it pulled 3 different times.
Okay.
Within a 30-day period. Outside of that, You don't want to be still shopping too many people. But again, it's not going to have a derogatory mark of 10, 15 points. You're looking at something in the single digits.
Sure. Now, I've heard to stay closer within a 14-day period, but I'm assuming within 14 or 30 days is okay.
Yeah,
Okay.
they'll understand it. They kind of look at all, wider lens 30 days if you can combine it, because you obviously want to be moving efficiently and getting through the process with whatever lender you're working with.
Okay.
So sooner the better, but inside 30 is still a safe bet.
Okay. Cool. Now, moving on to our next point, myself coming from a realtor, you need representation as a buyer. Whether you're buying new construction or resale, right? You don't necessarily just want to work with the listing agent because they obviously have that loyalty to the seller, which it's okay. Like some people actually do prefer to work with the listing agent, but that may not always be the best scenario for you. And then, of course, if you're looking to purchase new construction, then whoever those agents are that work for that builder, they represent that builder. They're not necessarily looking out for your best interest. So you need representation, and it's no cost to you. So definitely hire a buyer's agent that you trust.
Yep. It's always most important to work with someone you're comfortable with. And so I say this every single time I have a new build client is, do you want to work with a lender that works for the builder or a lender that works for you? Right. Same thing goes with an agent, as she mentioned. Do you want to work with that salesperson who is selling the home for the builder, or do you want to work with someone you can trust to represent your best interests?
Very true. Very true. Now, another concern that I'm sure a lot of people, maybe like millennials or even some of our next Gen Zs, right, who are coming out of college, that fun student loan topic. So if you have student loans, they do impact your debt to income ratio, but please touch on like the options there that they would have.
First and foremost, just because you have student loans, big or small, it's absolutely not a deal killer. There's a couple different ways we can approach it. So we can look at what your payments are right off the bat. We can have you request with the servicer of the loan an income-based payment plan, which will typically be our best option for getting the smallest monthly payment. So they take exactly what it looks like. They look at your income and they come up with a payment plan based on your balance. Otherwise, we can look at it a few different ways depending on the loan product. Looking at 1% of the balance is your monthly payment, or 0.5%, depending if we go FHA or Freddie Mac. So there's a couple different ways from the lender's side we can evaluate what that monthly debt looks like. But definitely just be known that just because you have huge student loan debt doesn't mean you're going to be disqualified for buying a home. It's really just like the starting place for us to take a look at where we can be flexible and creative.
Okay, cool. Well, that should give some people some peace of mind, because it's unfortunate, but it is something that we have to work around and figure out.
It's one of those things where you don't know until you start the process.
Sure.
And there's so many people who think that their credit score is terrible, and you're like, you actually have 695 credit, like you're in great shape. So people who think there's this mountain to climb in front of them because they never start the process, don't know that they're already there or that they're so close to being qualified anyway.
Mm-hmm. Now, getting back to credit scores, right? Because it's very important that you know all three of your credit scores, because I know between TransUnion, Equifax, and Experian, one may report one thing, or your score may be a certain thing on one bureau but different on another, and lenders usually take that average. So could you touch on the importance of needing to know your scores?
Needing to know your scores is huge in the perspective that the consumer normally gets it from the Equifax monthly email you get. Certainly is a good starting place. From us, we do look at all three scores, and the way that we pull is slightly different than what you'll see in your monthly update. Typically, ours has a little bit more weight to some negative things on your credit report, whereas the consumer-based one won't have so much impact on those negative marks on your credit. So knowing all three is very important, because we take the middle score when we qualify you. So we might have a 710, a 700, and a 650. Great news, we don't use the 650. We use the 7, what is it, 700, in the middle. So be aware, because you want to know exactly what all three are reporting. Something to keep an eye on, because you want to make sure anything that's fraudulent gets taken care of in real time versus when you're waiting till the very end to pull credit and buy a home. So it's just great to know where you stand. It also helps you manage what your debt to income ratio is, because it will tell you what we're gonna manage and evaluate your credit on, so you can find a way to budget, whether it's saving or just paying off debt and getting that all straightened out.
Sure. That's great info. Great info. Now, this may sound like common sense to a lot of people, but you definitely want to purchase a home before financing a car.
I can't tell you how many deals I've lost for people who bought the car because they were waiting to buy the home in 6 months, and then they bought the truck or the jet skis or anything you finance 2 months before, and they're like, let's go. And then you find out that they've taken on $900 a month in debt.
Right, because that's the issue with financing a car prior to purchasing a home. Now, unless you pay cash for a car, that's great. Or if your monthly payment is really low and it's not really affecting your debt to income, that's cool. But you know, if you have a fairly high monthly car payment, that is obviously going to affect your chances of qualifying for a loan, because now you technically have that much less income per month to make your payment.
It's something that you can do strategically. And again, let's say that we've been working together for 6 months and we know that you have enough income to absorb a payment of X amount of dollars. Great, but go into it with strategy, not I want a brand new truck. Oh, now I want a brand new house. Like, they usually don't go hand in hand.
Yeah, no, for sure. So make sure you purchase your home and then finance your car. try to hold out as long as possible.
And I'll say this, you can get a car loan basically anywhere at any time. With any credit score, it's just going to affect your rate.
Sure.
You could probably put a couple grand down on a $80,000 car or truck and be able to get that loan, but it certainly doesn't work in reverse.
Yep, for sure. So true. Now let's touch on filing taxes. Obviously, in order to qualify for a home, you need to file. You have to have 2 years worth of tax returns filed. But I know it's a little more intricate for those self-employed individuals. So do you want to touch on that a little bit?
For sure. Being a self-employed borrower, you need to have at least 2 years of self-employed income. Where it can get a little messy is if he was transferred from, let's just say, a commission-based role that has some salary to a fully self-employed. It can be a bit of a stretch for us to be able to prove that 2 years of continuity, because us as lenders want to make sure that whatever you're doing is stable for 2 years. So switching from salaried to self-employed can certainly back up the process in being able to get approved. Switching from things like hourly to salaried certainly doesn't have as many complications. And if you're switching from a salaried job to a salaried job, there's pretty much no real roadmap or any hiccup that we hit in the road going that way. But just be aware of, if your long-term plan is to own a home, be strategic in the way that you're setting up, whether it's your side hustle or your main hustle, that you want to have that 24 months of continuity there.
Perfect. Okay, well, I hope we didn't overwhelm them too much with getting the basics of getting pre-approved, right, to purchase your home. So let's just say you've done it. Congratulations, you've gotten pre-approved, you're ready to house shop. Now, my number one tip once you are under contract on a home is you do not want to purchase a home without a home inspection. Now, I know within the 2020 and 2021 market, even parts of 2022, when it was extremely competitive, some people waived home inspections. That is a big no-no. You do not want to do that, because when you buy a home, even with new construction, right? Like some of those homes have issues. But when you are purchasing a home, period, you're purchasing that home's problems. So you want to know what those are through the gate. Do not purchase a home without a home inspection.
Yeah, that's a great point. You're going to inherit thousands of dollars worth of issues potentially that you could have found with a $150 inspection.
Yeah, no, for sure. And then you always want to get title insurance, which that once you've opened escrow, you're obviously doing that with a title company. Here on the West Coast, unless through a title company, I believe on the East Coast that's with closing attorneys, so that process may be a little bit different.
Yep, it's slightly different. A few different moving pieces. Out here, we work with title and escrow companies. Mainly on the East Coast, they're called lawyer states, so you're working with title attorneys and things like that. But they're still doing the same amount of paperwork. But you still want to make sure you get that insurance because they're going to ensure that there's no other liens, there's nothing else on that title.
Yep.
There might be someone who's going to try to jump in front of you and take the house from you because you didn't get the title insurance, and make sure that everything's clean. So again, worth the money to make sure you've got that peace of mind that this is your house, this is your title to it, you own it.
Yeah, very true, very true. Now, actually, my last tip, because I feel like on a separate video we could dive a little bit more into once you're in escrow and like what to expect with that, with that process, because a lot of that won't really make sense until you're there, right? Until you're working through the process. But once you are in escrow on a home, you want to remain as stable as possible. So whatever your income was at that time of getting pre-approved, whatever your credit was, and whatever your debt was, you don't want any changes unless it's for the better, right? Like if you get a raise at your job, great. If your credit does increase, great. But you want to remain as stable as possible. So I know you have quite a few tips on that.
As we kind of mentioned, people have bought cars a week before closing. People have left jobs a day before closing because they got in a fight with their boss. Just know from the lender perspective, we don't monitor the credit in terms of seeing you spending anything extra on your Amex, but we will monitor it to see if you've opened up new trade lines. Another one I see is people going to whatever furniture store or Best Buy and buying the new toys before. We're like, oh, I just saw you opened up a Best Buy card and spent $8,400 yesterday. Like that will impact your ability to stay approved and qualified. So to her point, stay stable. If you're an hourly borrower, make sure you're still working your max 40 hours. Like don't take the time off to go and start picking up furniture and doing all the things that would lead you to lose hours. So stay stable, keep paying your bills on time, don't open up new lines of credit, don't buy vehicles. Just make sure that you do all of that the day after closing.
Right, let's just get you closed and into your new home.
Yeah, get the keys, close, then go shopping.
For sure. Well, I think that's pretty much it for me. Do you have anything else that you want to touch on?
That's pretty much it. I would just reiterate, you always want to start this process with the lender as early as possible. Whether you're buying next year, this year, 6 weeks, 6 months, what I always say is you don't know what you don't know. And so if we go through the application process, we see what our credit scores are, maybe we need a little bit of work, maybe we don't need work, maybe we need to add a borrower, things like that. If we know in advance, we can at least be strategic with how we get across that finish line versus I want to shop in April for a house in May and we open up this Pandora's box of problems. Let's just say that your lease is up, we're really up against the wall. Like, give us enough time to really be able to roll with the punches and get creative if we have to solve some problems.
Yeah, and it alleviates so much stress off of the buyer as well, because the process can be scary, will be scary, and will be stressful as well. I mean, even the smoothest of transactions have little hiccups that come up. So we just want to make it as seamless as possible for the buyer as well.
That's just it. We can stretch out that stress and at least know we can tackle it in small increments versus like having to be under the microscope and get everything done in 5 weeks. It certainly makes it easier and less stressful for everybody involved.
Cool. So true. Well, thanks so much. This was great.
My pleasure.
Yeah,
thank you for having
really
me on as well.
And thank you everyone for watching. If you have any questions, please leave them in the comments, and we'll see you on the next one.
Take care.